The average first-time buyer in the UK is now 32 years old and putting down a deposit of £53,800. That number stops a lot of people before they've even started. But here's what most people don't know. You do not need £53,800 to buy your first home. Depending on where you live and which lender you use, you could get on the property ladder with significantly less. By the end of this video, you'll know exactly how much deposit you actually need, how deposit size affects what you pay every month, and the fastest realistic ways to build yours wherever you're starting from. Let's start with the basics. A mortgage deposit is the amount of money you contribute upfront when buying a property. The lender, usually a bank or building society, covers the rest with a mortgage loan. The deposit is expressed as a percentage of the property's purchase price. So on a £250,000 property, a 10% deposit is £25,000. The lender provides a mortgage for the remaining £225,000. The relationship between your deposit and the mortgage is expressed as a loan-to-value ratio, usually called LTV. If you put down 10%, your LTV is 90%. If you put down 20%, your LTV is 80%. This number matters a great deal, and we'll come to why in a moment. One thing to be clear about from the start: the deposit is not the only upfront cost when buying a home in the UK. You will also need to budget for solicitor fees, typically £1,500 to £3,000. A survey, typically £300 to £700. And potentially stamp duty, though first-time buyers in England and Northern Ireland pay no stamp duty on properties up to £425,000. Scotland and Wales have their own equivalent taxes with different thresholds. Make sure you factor these additional costs into your total savings target. The minimum deposit accepted by most UK mortgage lenders is 5%. That means on a £200,000 property, you would need £10,000 up front. 5% deposit mortgages are available, and the government's mortgage guarantee scheme has supported their availability in recent years. However, there are some important caveats. 5% deposit mortgages come with higher interest rates than mortgages with larger deposits. Because the lender is taking on more risk by lending you 95% of the property value, they charge you more for that risk. We'll look at exactly how much that costs you in the next section. Not all lenders offer 5% deposit products, and the availability can change depending on wider economic conditions. At the time of making this video, 5% deposit mortgages are available from a number of mainstream UK lenders, but it is always worth checking current availability with a mortgage broker. Also worth noting, some lenders require a minimum deposit of 10% for certain property types, including new builds and flats. If you're considering either of those, factor that into your planning. This is where deposit size really matters, and why saving a little longer to reach a higher deposit threshold can save you thousands over the life of your mortgage. Mortgage rates in the UK are tiered by LTV. The lower your LTV, meaning the bigger your deposit, the lower the interest rate you'll be offered. Let's put numbers on it. On a £200,000 property, with a 5% deposit of £10,000, your LTV is 95%, and you might pay an interest rate of around 5.5% on a 2-year fixed deal. On a £190,000 mortgage over 25 years, that's a monthly payment of approximately £1,163. With a 10% deposit of £20,000, your LTV drops to 90%, and your rate might fall to around 4.8%. On a £180,000 mortgage over 25 years, that's approximately £1,024 per month. With a 15% deposit of £30,000, your LTV is 85%, and your rate might drop further to around 4.4%. On a £170,000 mortgage over 25 years, that's approximately £935 per month. The difference between a 5% and 15% deposit in this example is over £200 per month. That's nearly £2,500 per year, and over £60,000 over the life of a 25-year mortgage. Saving an extra £20,000 up front could save you significantly more in the long run. The key thresholds to be aware of are 5%, 10%, 15%, 20%, and 25%. Each one typically unlocks meaningfully better rates. If you're close to one of these thresholds, it is almost always worth pushing to reach it before buying. Note that mortgage rates change frequently, and the figures above are illustrative. Always get personalised quotes from a mortgage broker before making decisions. The £53,800 average deposit figure is a national average. In reality, how much you need varies enormously depending on where in the UK you're buying. In London, the average first-time buyer deposit is significantly higher, often exceeding £100,000 on properties that cost considerably more than the national average. A 10% deposit on a £450,000 flat in London is £45,000 before you've even accounted for solicitor fees and stamp duty. In the north of England, Scotland, Wales and Northern Ireland, property prices are considerably lower and deposits are proportionally more achievable. In many areas of the North East, Yorkshire or Wales, a 10% deposit on an average first-time buyer property might be £15,000 to £20,000. This regional difference is one of the most important factors in your planning. If you have flexibility over where you buy, understanding the property market in different regions could significantly affect how long it takes you to get on the ladder and what your ongoing mortgage costs look like. Here are the most effective strategies for building a house deposit in the UK in 2026. First, open a lifetime ISA if you haven't already. If you're under 40 and buying a property worth up to £450,000, the 25% government bonus on up to £4,000 per year is the single best tool available to first-time buyers. We covered this in detail in the previous video. Second, use a high-interest easy access savings account or a fixed-rate cash ISA for the rest of your deposit savings. With rates currently above 4% in many cases, keeping your deposit in cash makes sense, given you'll likely need it within a few years. Third, set up an automatic standing order the day after payday. The single biggest obstacle to saving is spending the money before you save it. Automate your savings so the decision is already made. Fourth, review your largest expenses rather than cutting small ones. Cancelling a streaming subscription saves a few pounds a month. Reviewing your rent situation, car costs, or food spending can save hundreds. Focus where the money actually is. Fifth, consider a side income specifically dedicated to your deposit. Even an additional £200 to £300 per month from a side hustle or overtime compounds quickly when you're working towards a specific target. Beyond the lifetime ISA, there are a small number of other schemes worth knowing about as a first-time buyer in the UK in 2026. The Mortgage Guarantee Scheme. This government-backed scheme encourages lenders to offer 5% deposit mortgages by guaranteeing part of the loan. It makes 5% deposit products more widely available than they would otherwise be. Shared ownership. This allows you to buy a share of a property, typically between 10% and 75%, and pay rent on the remaining share. Your deposit is based only on the share you're buying, which makes it significantly smaller. You can increase your ownership share over time through a process called staircasing. The First Home Scheme in England. This offers certain new build properties to first-time buyers and key workers at a discount of at least 30% below market value. The discount stays with the property when you sell, meaning it remains affordable for future buyers. Help to Buy ended in 2023 and is no longer available. If you've seen older content referencing it, be aware that scheme no longer exists. Always check the current eligibility criteria for any government scheme before relying on it as part of your planning. Terms can and do change. To bring it all together, you don't need the national average of £53,800 to buy your first home. The minimum deposit is 5%, though 10% or more will unlock meaningfully better mortgage rates and save you money every month. Where you buy matters enormously, with deposits in the North and Wales far more achievable than in London and the South East. Use a lifetime ISA for the bonus, automate your savings, and aim for the next deposit threshold rather than just the minimum. Getting on the property ladder in 2026 is genuinely difficult, but it is not as far out of reach as that £53,800 average figure might suggest. If this video helped you understand what you're actually working towards, subscribing takes 2 seconds and means you won't miss a video. We post twice a week on making your money work harder in the UK. And next up, we're covering what replaced Help to Buy and which government schemes are actually worth using for first-time buyers right now.